Welcome everybody to the Practical Entrepreneur Show. This is episode number 40.
Dang!
Nice. Fuck, I never thought I'd get to 40 like so soon.
A big 40.
Well, maybe probably sooner, but got a little busy. COVID kind of changed everything. Mm-hmm. But anyways, I have my accountant. So we are going to talk taxes today. So Julio, go ahead and introduce yourself. Let us know what you're about. So that way people know who you are, and then let people know, what's it called? If you have any like Instagram handles, anywhere they can find you online, so if they want to reach out to you afterwards.
Sure thing. Thanks, Nick. Appreciate it. Thanks for having me.
Yeah.
So hey everyone, my name's Julio Ruiz, the owner of Julio's Tax Services. It's a small accounting and bookkeeping office firm, if you will. We specialize in individual taxes. We also handle small business bookkeeping. We do payroll, corporation taxes, you name it. We're building every year, thankfully. Started off literally with 10 tax returns my first year, and this past year we filed well over 500 tax returns, individual tax returns.
Nice. So good stuff.
Yeah. So thankfully it's been good. It's a lot of hard work, but here we are.
Nice. Now, did you go to college and study accounting? How did you get into taxes?
Sure. So even before I knew I wanted to study accounting, my mom's an accountant.
Oh, okay.
So moms know best, right?
Yeah.
So my mom's an accountant. I was seeing everything that she would do. And math was always my thing growing up. I was always very good with math, with numbers and stuff. So my mom saw that and she said, hey, why don't you look at accounting? So in high school, I took an elective. It was an accounting course. Aced it. That was probably my only A anyway. So I took that course and I realized, you know what? I think I do like this. Let me explore it a little more. So then I went to college, Cal State Dominguez Hills, go Toros. So there, obviously the first 2 years are your undergraduate courses, but I started mixing in a couple of accounting courses. Okay. And I knew that's what I wanted to do. But then I started taking a couple of tax courses. Started off with individual tax. And then it was individual tax 1, and then individual tax 2, and advanced taxation. Okay. So I decided to take those courses because same thing, moms know best, right? Yeah. She explained, hey, you know what, if you want to go into taxes, it goes very hand in hand with accounting work.
Got it.
You have the books.
That makes sense.
You have the financial statements. You literally translate that onto the tax return. So I said, you know what? Let me see if that's what I want to do. Because there are two separate avenues in the end. One is accounting, more finance related, and this is tax. Yeah. Right. So I started taking the tax courses. Same thing. I was able to pick up everything fairly quickly, and it was definitely interesting to me. Because accounting, it's just black and white. I mean, unless you're Enron. But anyway, it's pretty
unless
black
you're
and
Enron.
white.
Oh, you went old school. Oh, I haven't heard that in forever. That was what, 2007? 2006?
No, it was 97. Enron was 97.
Oh my God, that's such a long time ago.
We were
I
kids.
totally remember that.
We were kids, but we did a couple of case-related studies on that. Obviously, when it comes to ethics,
yes,
what you shouldn't do, Enron is the number one thing to look at.
Wow.
So again, just going back to taxes, I started taking those courses. Again, it's very interesting to me because there's millions of different cases. I don't want to call them cases, but different scenarios. There we go. Okay. Different scenarios with taxes. It's not just black and white. There's millions of different scenarios, and that's what's really interesting to me. So that's why I decided to pursue more of a tax career. And thankfully, it's been good. It's been good to me.
Very nice. Now, what I really want to focus on is, I guess the topic is, don't be afraid of taxes.
Absolutely.
Because I believe many people are always like, oh, I don't want to pay a lot of taxes, right? And we were talking beforehand, and it's very important to understand when we get older and we are getting ready to retire, the money that we put into the system is what is going to come out when we retire. And even like now where I was like, okay, I want to purchase a property, if you're like making, $100,000 before taxes, but then you write off, so much, and then you're only going to claim like $35,000 a year, when you're applying for a loan, they're only going to qualify you based off that $35,000,
Right.
not off the $100,000 that you're technically making. So here's my question, right? When someone if someone has a small business, what are the advantages when they have a small business and they have full-time income, as far as when it comes to like their taxes? What do you recommend someone who's in that position to be like, all right, I'm making money, but at the same time, I want to be able to my business to grow, so I'm investing that money into my business. But how should they kind of think about it as far as in the sense of taxes?
Right, absolutely. So going back to the first point that you brought up about not being scared of taxes, absolutely. No one should be afraid of taxes. I get it. It's scary. None of us want to pay taxes.
Yeah.
I understand that. It's your hard-earned money. I don't want to pay taxes,
Yes.
but hey, this is where we are.
Yeah.
Now to your second point about small businesses, when you have your small business, there's various avenues that you can look at when it comes to tax saving versus reinvesting that money in your business and kind of deferring those taxes for a later time. Okay. So there's different avenues that you can do, or you can follow versus a full-time salary. So for example, if you have your small business, or if you're an employee, right? If you're a salaried employee, W-2, that's fairly simple. You just fill out your W-4. You say what your filing status is, your dependents, done deal. That's it. Easy.
Yes.
Now, for small businesses, that's where it comes into play. There's more complicated issues. With small businesses, you're looking at how many employees are you going to have? How big is your business going to be? Are you going to be a sole proprietor versus a corporation? And if you're going to be a corporation, what type of corporation? S Corp, C Corp, LLC? Are you going to be a partnership? So all of that, that's what you need to kind of do a little bit of research. And I'm not saying this to scare anyone away from wanting to start their business, but this is just good for everyone to know so that they can make a very educated decision, a very educated, knowledgeable choice.
Got it.
You know what I mean?
No, that makes sense, because you just made me think of like another question, because, at some point, we always have to be mindful of like, okay, as we start to grow, business starts picking up, you start making a lot more money, I hate, this one thing that I dislike about America is that we're so happy, right? They think that someone thinks that you have money, some little thing happens, and then you just want to sue you. So I know being a sole proprietor you're kind of at risk, right? At what income level should someone consider from being like a sole proprietor, meaning that using their Social Security as their tax ID, to jumping into either starting an LLC or an S corporation or C corporation?
Sure. Well, the number one thing, I don't really like to look at it more as an income type level, okay, but more of a, what do you want to protect? Because once you do decide to incorporate, then you can kind of look at, okay, if I have a house, if I have more than one property, if I have valuables, if I have, maybe I do have more than $200,000 coming in net, right? So it's not your gross revenue, but your net income.
Got it.
So net income being after all your expenses. So once you do start having things that you do want to protect, that's when you have to look at being forming a corporation, because that's, to your point, let's say you're Nick, sole proprietor. I see that you're actually doing well, and I just want to make a quick buck, right? To your point, we're
Yes.
very sue easy, right? So I slip and say, oh my God, my back or something. I sue you, and this lawyer is pretty good at, just draining every penny they can out of people, right? That takes you out of business, unfortunately, which is the case. It's
Yes.
very often. Now, that would be Nick, sole proprietor. Let's say Nick Incorporated. I go to your place, I slip and fall and say, oh, my back. If I sue you, I'm suing Nick Incorporated.
Correct.
What does Nick Incorporated own? What does Nick Incorporated have? If Nick Incorporated only has, I don't know, $20,000 in the bank account, that's all I could go after. As opposed to Nick, sole proprietor, or Nick individual, where you have properties, where you have your, your retirement plans, your stocks, your, whatever investments you have, that's protected. They can't touch that. Now, if it's a corporation, only whatever the corporation has, that's the only thing people can go after.
Got it.
So that's one of the many reasons why, or why someone should look at being a corporation. Because again, when you do create a corporation, there's corporation tax returns. And then depending on which state you incorporate in, every state has different rules, regulations as to what corporations need to do, tax-wise, state tax-wise. So again, I don't want to scare anyone with all these facts, but this is what we need to know to make an educated decision.
Got it. Yeah. No, that's super important, because as far as when you said, like, if they come into your business, they slip and fall, they can sue the corporation, and they can only go after what the corporation has.
Right.
Now, I learned this through a mentor of mine, and I thought this was super helpful, because I don't want to be a real estate investor, but I'm going to have, I plan to have properties.
Right.
And we were just having a conversation, and we're just talking about, so that's his deal. He's like, whenever you buy a property, or whenever I purchase a property, I create an LLC just for that property. And then when I take out the loan is under another LLC that I am a part of. Mm-hmm. So it's like different layers. So whenever you go in, like, and I learned, he shared this, he goes, I learned this really quick. At my first investment property, someone sued me. So he goes, I had to, adjust. So now I have multiple properties, but if there's an accident at that property, they don't sue all of the properties. They can only sue that one, because it's an individual corporation. And then they can't come after me because it's owned by an LLC that I'm a part of, so I'm nowhere to be found. And I'm like, mind blown, right? With this. And I was just like, wow. I'm like, okay. And that's how people do it. And that's how they protect. And it's honestly for our own protection, because there's so many people out there that work with lawyers, and that's all they do. Yeah. They go and they'll have an accident, and I'm hurt, and then all of a sudden, all these, and he goes, and I remember when he told me this, he's like, just because I own real estate, just when you own real estate, people assume that you just have money. Mm-hmm. Mm-hmm. So I'm just like,
which is very unfortunate. It really is. It's really, really unfortunate. But hey, that's the world we live in. So we, if those are the rules that are in place, if that's the rules you have to play by, okay, then we have to find a way that we can make those rules benefit us. And one of the ways that we can make those rules benefit us is exactly what you just mentioned. Creating corporations, to your point, they sue the corporation, they sue the LLC, whatever you created, they sue that instead of you as the individual.
Got it. Now, you said as a sole proprietor, if I own, Nicolas coffee shop, and someone walks in and everything's under my name, and if I have a 401k, they can come after your 401k?
Not necessarily. So let me rephrase that.
Okay.
But not necessarily going after your 401k, but that counts toward your net value.
Oh, okay.
So meaning if they are suing you for X amount, where do you need to pull money from to pay that? You're going to have to pull from 401k. That's what I was trying to get at.
Okay. So, gotcha. That makes sense. So next question. Or actually, not next question. I'm gonna share something that a mentor told me, and I was like, oh, okay. So this year, I didn't write off anything. Mm-hmm. Everything that I made, I filed taxes, and I had to pay taxes.
Right.
So it was like $2,700 I had to pay. Mm-hmm. And I remember I was like mad. I'm like, oh, it is what it is, but whatever. It's a price to pay. That's what it is. I did it because I wanted to apply for a loan, and I needed to have higher income. Right. And I remember I was talking to my buddy who does mortgages, and I was telling him, he goes, hey, I want to make sure that I buy a property this year because I don't want to pay taxes next year, because I want to be able to write off stuff so that way my income could be lower. And he's like, Nick, I'm going to stop you right there. He goes, I'm going to stop you right there. Get my phone, because of course I dropped my phone. I'm going to stop you right there. Don't ever limit yourself. He goes, don't ever not stop yourself from making more money because you want to pay taxes. He's like, you want to grow, like, right? Because you want to grow. And then you also want to show the government that you're growing.
Exactly.
So because if the government starts to see that you're not growing, then are you running a business or is this a hobby? He's like, and he goes, and if you get to a point where you're like, you're making good money and you have to pay taxes, pay it because you can pay taxes. And I was just like, mine completely shifted. I'm like, he's like, if you're paying $6,000 in taxes, whatever, like after your payroll and then your business, pay it because you can. And I was just like, oh, right. It was just like, okay, completely changed my mind. So what do you think about that philosophy and that mindset?
So I am not going to argue that because I think that's a very excellent way to look at it. Because if you're paying a lot in taxes, I get it. Most of us are going to say, I don't want to pay this much in taxes. But it's a different perspective to look at it from. If you're seeing it as I can pay $6,000, you know what? I'm paying $6,000 because I'm making this much more. This is my bill. Here you go. So, and you're absolutely right. Just because there's the whole income tax bubble that's there, that shouldn't scare anyone away. And again, it just goes back to what I said before about all the information about the corporations versus LLC versus all that. None of that is to scare anyone, but it's to inform everyone. And again, if you have a good business plan, if you have something that you feel is going to make you money, go for it.
Got it.
Go for it. Now I know there's a lot of corporations that somehow find ways to not pay.
Yeah.
Those are the rules that are in place. They found ways around it. There you go. So, but again, having to pay taxes shouldn't scare anyone away. And to the point that your mentor was talking about, even if you have to pay X amount, do it because you can. Do it because you're telling yourself, hey, this is what I'm going to pay because I'm making this much more.
Yeah. I was just like, I've never heard that before, right? I never heard that before because you've always, have like that mindset, like, oh no, you don't want to pay a lot of taxes. And I thought about it, I'm like, well, same thing, like when we retire, right? Like if you're filing taxes and you're putting $100,000 that's your income, right? You're gonna get a lot of the money back, or you're gonna have a nice retirement. Of course, again, not to rely on the government for your living, but it's a nice extra income to have. Now, he also did tell me this. He goes, all right, Nick. And he goes, but once you get to a certain income level and you start making Trump money, then you can start doing Trump things when it comes to your taxes and things like that. So you pay less taxes, but that's once you reach a different level. Yeah, there's
definitely a level that you have to reach to what I said earlier about the corporations that they're able to find ways to not pay as much. They're paying a room full of tax accountants, full of tax lawyers to find ways to do that, right? But that's, to your point, that's when you're at Trump level, Trump money.
Yeah.
That's when you can afford to kind of maneuver your way around and not have to pay that much. Because again, if you're an average Joe like us,
yes.
If we have our small business, if we have our salaried income, there's only so much that we can do. Even as a small business, there's only so much you can write off. Because if that's your only source of income, to your point, what if you want to buy a house? What if you want to apply for a loan? What if you want to buy a car? What if you want to, just do things in life that everything goes back to the tax return, right? Because when you go to the loan originator or the mortgage company, what's the first thing they ask you?
Yeah, your income taxes.
Your income taxes.
Or your proof of income,
exactly.
W-2s, 1099, whatever it is that you have.
Exactly. So to your point, if you're a small business owner and you're raking in $150,000 a year, but on your tax return, you're only showing $30,000, $40,000 because you're scared of taxes. Well, I get it. I'm not saying it's a bad thing because I get it. We don't want to pay taxes. But when you turn that around and you do want to buy a house, the banks are going to see you're only making $30,000, $40,000 a year. I'm not going to give you a $400,000 or $500,000 loan. How are you going to pay it back?
Yeah, you can't pay it back.
Exactly. You can't pay it back. So that's when it comes back and bites you in the behind.
Yep. So, and a lot of people don't see that. I'm just like, I get, right? You want to avoid paying taxes, but like when you want to get into a home, like
exactly,
good luck.
Exactly.
Good luck. So I'm liking all this because I'm very dumb when it comes to taxes. I mean, just for lack of better words. So when someone looks at like, when someone asks me about health insurance, right? Mm-hmm. And like, well, Nick, how much am I going to pay? So I have a grid that says if you're X amount of person in your household, income, and then I just kind of match it up, and I kind of have an idea of how much they're going to be paying for a premium for health insurance. When it comes to taxes, like in brackets, is there something like that exists that someone can find online?
Absolutely.
Okay.
Yeah, absolutely. You can go to irs.gov, and there are tables. There are tables that say if your income is between 0 and 10,000, if you're single, head of household, married, filing joint, married, filing separate, those are the 4 filing statuses, right? So you look at your income, you look at your status, and that's when you can kind of get an idea as to how much you're looking at paying, because how taxes work, I like to try and make it easy. I know it's hard to make taxes easy. It's boring and it's very complex, but if you make it easy for yourself, cool.
Got
right?
it.
So with that, with those graphs, if you will, or brackets, again, if you look at your income, you can see, okay, if I'm making $50,000 a year, I'm a single person, then you're going to see, okay, based off of the percentage, because you have to look at the tax brackets too. So you see the tax bracket, you're going to be paying X amount plus a percentage over this dollar amount.
Okay.
I know that's the part that gets a little complex.
Yeah, I'm kind of confused.
Right.
And I'm kind of trying to picture this like document, and I'm like super excited to try to find it so I can like learn it. But go ahead and go on.
So it's pretty easy. So again, so you look at 50,000, right?
Okay.
So we'll just make it easy. You're making $50,000, and you're going to be looking at the income between. Don't quote me on this. Just go to irs.gov, find it for yourself. But 50,000.
No quote.
So you're going to fall between a 30,000 to 80,000 bracket, right?
Got it.
So you're 50,000, you fall in that. Now you look at your filing status. You're a single person. Single says, okay, you're going to be paying, let's just say 5,000 plus X percentage of anything over 40,000. So then you do the math, and you can come up with the exact amount that you're going to be looking at, with a delta of, let's just say
plus or minus, right?
Yeah, plus minus $2,000 or something. But that graph is actually very, very accurate. Okay. You can plan for it. You can use that to plan for it. Because I actually have quite a few small business clients that file their taxes with me, and they're asking, hey, if next year I'm looking at making X amount, how much should I prepare for? That's where that graph comes in handy. And again, we just follow the lines. We say, okay, you're looking at making X amount. Okay, here it is. You're single. Here you go. So here's your minimum amount plus any percentage over this amount.
Got it.
So that can come out to, I don't know, 12, 14,000. Yeah, again, these are all hypotheticals, right?
Yes, yeah.
So you look at that amount and you can plan for that.
Okay.
And then if you really want to get into details, you can plan for that amount that you're going to pay, and you can send in estimated tax payments throughout the year. So that way, at the end of the year, instead of receiving a $14,000 tax bill, you've already paid that throughout the year. So really, maybe it's only going to be a couple $100, maybe even a refund because you paid more.
Yes.
So that's where tax planning comes into play, tax forecasting, and all that. But yes, so to your original point, you can go to irs.gov and just look for the tax brackets, or the tax graph.
This graph that you talk about, is it an Excel spreadsheet or is it a PDF that is on irs.gov?
It's a PDF that's on irs.gov. Now, if you're tech savvy, you can obviously translate that into an Excel sheet and just do, if you're an Excel wizard, or if you know Excel, you can definitely maneuver it that way.
Okay.
But for the most part, no, it's a PDF that you can find on the IRS website.
Perfect. So then it is very similar to the graph that I'm familiar with health insurance. So now I cannot wait. So for the people who are listening, if you want to get this form, I can make it simple for you. I could just email it to you, but you gotta email me. And all that information is in the show notes and the show description of this podcast. So if you want that, just get in contact with me. I'll send it to you because I'm gonna get it. And by the time this airs, I will definitely have it in my possession, and I
Sure.
can just send it a quick email to you so you don't have to find it.
Sure.
That way you can get comfortable with taxes, because I'm getting more comfortable with taxes. Oh my goodness, this is like, my mind is just going nuts right now. Like I can't, because it's so intimidating, right? Like I'm like, I don't fucking know anything about taxes. Like, I just know I got to pay them. That's it. That's how I think about it.
Right.
Now, here's another thing, because, I'll get, I have to deal with a lot of taxes with Cover California, and even with my job, because whenever someone wants to apply for Cover California, and most of my customers are small business owners, so I ask for their taxes, and there's a lot of forms.
Yeah.
Does each form have a purpose? As far as like your regular 1040 taxes?
Yes. So let me put it from this perspective.
Okay.
So the form 1040, right?
Yeah.
That's the one everyone's familiar with.
Yeah.
A couple years ago, you had 3 versions of it. I believe there were 3. You had your 1040 Easy, 1040A,
Yeah.
and just regular 1040. Now it's really all 1040 with the tax reform. I believe it was about a year or 2 ago from President Trump. That eliminated the need for simple forms, 1040A, because everyone is practically just filing a 1040.
Got it.
So the 1040, that's really just a summary of all the forms that were used to file to complete your tax return.
Okay.
Every line serves a purpose. Because if you look at it, if you're interested, if you really want to look into the tax return, look at your 1040 and you'll see some lines say Schedule 8812, Schedule C, Schedule A, Schedule E. Now, all those forms, to your point, they all serve different purpose, right? So I'll just give a couple off the top of my head. So Schedule A is your itemized deductions.
Okay.
Now, itemized deductions, that's when you have a lot of expenses to write off.
Okay.
Primarily, Schedule A is used by homeowners because the interest that you pay on your mortgage loan, that's one of the biggest write-offs. That, and then property taxes too. So homeowners usually use Schedule A. And then with that, you can also write off a lot of other expenses. You have donations, you have your DMV fees. And I think that's it, because again, with the tax reform, unfortunately, especially us here in California, we pay a lot in taxes.
Yes, we do.
We pay a lot in state income taxes.
Yes.
We just pay a lot. And unfortunately, the IRS isn't taking those write-offs anymore. They were a couple years ago, but again, with the tax reform, those got eliminated. And then with property tax, the same thing. At least on your resident, your residences, you can only write off, depending on your filing status. If it's single or head of household or married filing joint, you have a cap of $10,000 on property taxes.
Okay.
Think about the $1 million homes.
Yeah, they're paying a lot of money in taxes.
Yeah. So they're missing out on a lot of write-offs. And then if it's married filing separate, then you have $5,000. That's all you can write off. So again, depending on the state that you live in, us here in California, we pay a lot, right?
Yes.
So that's one area that really changed. And then another area that really changed are the employee expenses. Employee expenses, what I mean by that is, let's say, I'll just use this. So let's say you're in construction.
Okay.
You're a salaried construction worker, right? You use your car a lot to go to the different locations that you have to go to. If it's during work hours, those miles that you're driving, those are write-offs. So a lot of times, that's a big chunk of a write-off that you can use.
Yeah.
Unfortunately, the IRS isn't taking those expenses. California still is.
Okay.
So it's not a totally lost cause. But now, if we're just going to stick with federal income tax purposes, that's one area that really sucks. So that's a Schedule A in a nutshell, right?
Okay.
Now, Schedule C, just for purposes of this podcast, we're just talking about small businesses.
Yes.
Schedule C is a sole proprietor form.
Okay.
Okay. Now, Schedule C, that's where you put your gross revenue, and then you have all your expenses. Because at the top of that form, you write how much money you brought in.
Got it.
Right. So it could be X amount. Let's say just to make things easy, let's say 10,000.
Yeah.
And then you have a big section where it's all the expenses, your advertising expenses, your car expenses. your entertainment expenses, which also changed. I don't want to get into it, but yeah, that also changed too. But anyway, so you have all your expenses, right, to run your business. So you have that. If that comes out to $7,000, then you have your net income. It'll be $3,000.
$3,000.
So that's your Schedule C. Schedule E, for example, would be if you have rental properties. Same thing. It's practically the same as a Schedule C, but just for rental income.
Got it.
So to your point, all the different forms, they serve a different purpose.
Got it.
Different credits that you qualify for, your different income that you have. Every single form has a different purpose. And that number, that final number from those forms, then goes to the 1040.
Okay.
So.
Oh my God. This is so useful. I feel so informed. You have no idea. Like, I want to go look at my taxes and be like, I understand this. I know what this is.
I hope I'm not boring everyone.
No, I'm taking this in because I don't know anything about taxes and I want to be informed because, you know, if I'm gonna take my game up, I need to find out what I could take advantage of and stuff like that. I mean, obviously, right now, you know, I'm not making Trump money, and that's may not ever happen, but
that's the plan. It's always the plan.
It's always the plan, right? But it's always good to be prepared in case once you get there. Now, when it comes to Covered California, I'll have people that are customers. They're together, but they're not married. They have children together, but their accounts are separate. Covered California looks at their income, and based off of their income depends on how much they pay for health insurance.
Correct.
I called Covered California and I told them, I goes, can they be together on their account? And would that give them a difference in cost and difference in the premium? She told me, no. It all depends. They would end up paying the exact same what they're paying now. It all depends on how they file taxes. I'm like, oh. So, now, of course, you don't have all this information, and I wanted to kind of get like granular and get like really specific, right? At what point would it make sense? Actually, you know what? That's a personal question. I don't want to start like, you're like, hey, so like, you know, when can like my wife stay home and like I just take home everything? Like she's a dependent, right? So maybe let's just skip that question.
I think I may know where you were trying to get at now, because so again, for example, here in California, right?
Yeah.
You have to file a California state tax return, state income tax return.
Okay.
Now, the filing status for your California tax return may not be the same as your federal filing status.
Yes, right.
That I think that may be where you're trying to go to, and I'll give you a couple of examples. So here in California, we're known as a domestic partnership state.
Yeah.
So depending on the length of time that two individuals live together, they can file a married filing joint. In California. Like say, for example, if there's a same-sex couple, right? For federal filing statuses, they may not qualify as married filing joint. They may not. You know, there's a couple nuances that we have to look at there. But for California, they can file married filing joint. So for those purposes, they want to file married filing joint to get the point that you're trying to make. Maybe their premium with Covered California could possibly be lower.
Yeah, got it.
Then that they can definitely use that to their advantage.
Okay, that makes sense. Now, I did not know that, and I mean, yes, I know there's state taxes and federal taxes. So when we do our taxes, you're doing both federal and state, right?
That's correct.
Okay,
yeah.
And how is it broken up as far as, because I get my taxes and I get them all together, but how do I? What's California? What's federal? Like that's
sure.
Yeah.
So, so here in California, usually the form is called 540. So you know your 1040. That's obviously the federal tax return. In California, that form is called 540.
Okay.
And then same thing. There's different schedules. There's different forms that are all used to fill out and then come up with your tax return. So to your point, yeah, they have to be separated, but honestly, and you know, very, very thankful that technology has done this, because I've known people, mentors for myself, that they would have to file tax returns by hand. So imagine filling out all those forms just for the federal return, and then you have to do the same thing for California. So now, thankfully, with the tax programs, with the tax program that I use, I input all the information. Usually on the federal tax information, I input all the W-2s. I fill out the schedules, different schedules and stuff like that. All of that then gets translated to the California tax return or the state tax return. It could be a New York, Arizona,
Texas.
Exactly. No, not Texas actually. Texas doesn't have state income taxes. There's a lot. There's quite a few states. I think. God, I hope I don't look like a.
It's okay.
I don't know. But anyway, I think it's about 13 states that don't have income taxes, state income taxes. Nevada doesn't have state income tax. That's why Vegas is there.
My mind is blown. Why did I not know this?
So again, the beauty of technology, you input all the information, it gets transferred over to whatever state needs to get filed. Done.
Now I know why people have corporations in Delaware, right? Or is it that state?
Yes.
Man, and what's interesting is that because we're so uninformed about this, where the rich get richer, and it's because they know these rules.
Exactly.
These rules are they're put in place by the government.
Exactly.
It is us. We have to discover them, right? I'm discovering them now.
Yeah. And I don't. Yeah, exactly. And it's not to make this into a political discussion. No. That's the last thing we want to do.
Yeah.
But those are the rules that are in play for everyone.
Yeah.
I mean, everyone has a shot at the exact same end goal, right? I mean, if you have an idea, you go for it. If it's making money, then you have to start thinking about those extra things you didn't have to think about earlier.
Yeah.
So you have these big corporations that, like you said, you have Las Vegas. There's no state income taxes. There's no state income tax in Las Vegas. So a lot of people that are working there, making a lot of money, they're just paying federal state income taxes, but they're not paying state income taxes. Now that's just one area. Again, I don't want to go into that much granular level.
I know.
But
my wheels are turning.
So like athletes, they could live in one state, but
they play for a team.
They play for a team, they travel, and every state that they travel in, technically they're making money there, so they have to pay state income taxes. I don't know if you remember a couple years ago, there was a baseball player, Andrew McCutcheon. He was playing for the Pirates, the Pittsburgh Pirates.
Yes.
And his check stub somehow got leaked.
No, I didn't see that part, but what happened?
So that part, and this was, I mean, I was all excited, right? I'm like, oh my God, I was all excited about this boring stuff.
Sports, this is awesome.
So he happened to leave his pay stub, and you can Google this. I swear to God, you can Google Andrew McCutcheon pay stub. It'll be one of the first things. Right? Yeah, he's an outfielder. I think he's playing for the Phillies. Anyway, but yeah, so he happened to leave his pay stub. And mind you, this guy was getting paid very well.
Yes, he was.
And if you look at the pay stub, you have California state income tax. He never even played in California. New York state income tax. He never even played in New York. I forgot what game. It wasn't in any of those states, but those two states still got their 2 cents.
Oh, wow.
So if you look at it, that's what I'm saying. Like athletes, they have to really forecast. They really have to plan for taxes for that same reason, because they're categorized as entertainers, I believe, or artists and stuff like that. Same thing. They can live in one state, but if they perform throughout the country and stuff like that, depending on what state, they have to pay taxes.
Wow, that's so interesting. And this is where I always have to remind myself and remind people. Like Patrick Mahomes, he signed like a $500 million contract, right?
The first $500 million man.
Right? An athlete. And then I think about it, he's not taking home all that money because the contracts aren't guaranteed, and there's incentives and all this other stuff that adds up to that, right? And then taxes, right? So I remember Jim Carrey, I believe he never got paid directly. The companies, when they would pay him, would pay his corporation, and he would pay himself. Do athletes do that? Do you know of how they should, what's the best way for them, for entertainers to, kind of set themselves up if they are traveling to prevent themselves from getting into tax trouble?
So now that's when you're really getting into the nitty gritty. Like that's when you're really getting to the good part of taxes. This is when tax accountants are getting paid the big bucks, right?
Okay.
Because that they're getting paid for this exact reason, to try and save this individual, taxes, right?
Yeah.
So let's just say with Patrick Mahomes, I'd love to handle his tax return. I'd love to handle his finances.
Yeah.
Now for him, to the point they were making earlier, yes, I know for a fact there's a lot of athletes, there's a lot of artists, there's a lot of people who go traveling around the country, and instead of getting paid as John Doe, they're getting paid as John Doe Incorporated, because they create that corporation and that corporation pays them. The corporation pays the individual. Now now in that process, without getting into too much detail, they can save a little bit in taxes. I'll give you a quick example as to sole proprietor versus corporation. Now for tax purposes, let's say that let's just make it easy, $1,000. If it's a sole proprietor, you have to pay self-employment taxes. You have to pay your own Medicare taxes, your Social Security taxes, all the good stuff, right? So if you're a sole proprietor, you pay that. And that's usually more than what a corporation is, because if you're a salaried employee to a corporation, the individual pays half of it and then the corporation pays the other half. So now, I don't know if you caught this, but with the corporation, I didn't include self-employment taxes. So you're saving a little bit there.
Got it.
You know what I mean? Now this is just self-employed versus corporation. Individual, sometimes the tax rates are higher. And as a corporation, those tax brackets based off of the same income. Let's say it's $100,000. As a corporation, it could be smaller than as an individual.
Got it.
So there you could be saving money too.
Okay. And that makes sense, because I remember I talked to a buddy of mine who is a tax lawyer. He works for, I think, Ernst & Young, so he defends the big boys. And we were having this conversation about like, hey, I'm trying to get creative and starting a corporation. And he's like, this was really funny, and I cracked up because it's kind of in my neck of the woods. Whole thing about like getting sued. He's like, no, don't worry about your setting up a corporation and that protecting you from being sued. What helps you is having the proper insurance. I started laughing. Right? I was just like, because then that's what you have insurance for.
Exactly.
They sue your insurance. So I was like, oh, Jimmy, this is why I love you. All right. So back to that instant, because he was telling me, he goes, when you're an LLC, regardless if you make a dime, you have to pay the state of California, I think $800 a year, right, to keep the LLC. Or is that applied just for LLC, or is that for all corporations?
It's usually for all corporations. The $800, that's just a flat fee whether you make money or not.
Okay.
So that's just here in California. Other states they have their own rules and stuff, right? But in California, yeah, your friend is absolutely right.
Okay.
Even if you make $10, $10 million, or if you lose money, you have to pay $800 every year to California.
Okay. Now, is it possible, I'm going to get creative for myself, if I purchase a property in the state of Nevada, create a corporation, then I use that corporation as tax ID as my business identity. So whenever like insurance companies pay me, they pay that corporation. Does that help me in any way of like paying less taxes, like paying California taxes, if I now give these companies a tax ID that's a corporation based in a different state?
And we're getting to the good stuff here.
Yeah, this is the good stuff. I love it.
So there, I'm gonna give you a safe answer. I'm gonna say yes and no.
Okay.
Yes, you're right in the sense that if you have a corporation in Nevada, that's where it's created. That's where you have the bank accounts. That's where that's where the corporation is housed.
Yeah.
But where's your place of business? Where's your primary place of business? If it's here in California, California's gonna be like, well, I don't care, you're here. Pay up.
Got it.
So that's why I'm saying yes and no.
Okay.
Because yes, it can save you some money. No, because if your primary business is here, you have to pay.
Got it. Okay. Just, of course, I think that's where we I had stated earlier. Until you start making Trump money,
right?
You start doing Trump things.
Exactly.
So
you exactly, and you start to get creative, because again, that's you're putting in the time, you're putting in the hours, and I think I would think any average Joe would want to say, I want to keep most of it. This is me. I earned this. But well, it is what it is, right? And again, I don't want to scare anyone, but that's taxes. That's taxes, and taxes funds a lot of things that we need.
Yes.
Fortunately, it does. It funds a lot of social services. It funds law enforcement. It funds schools. It funds fire departments. A lot of our tax money is actually used, for things that we actually need. Yeah, exactly. Things that we actually need. Now that's a whole nother debate, whether how much is needed here, how much is needed there. Right? That's a whole nother debate, yes. Right? But taxes do fund a lot of the services that we need. So again, I get it. It sucks, but we can't take things for granted either. Yeah. We do need a couple of things, that the streets, if there's pavement, or if the pavement needs to be repaired, that's a city service. It's funded by local taxes. Yeah. If we're under attack, yes. Military, it's funded by taxpayer money.
Yes.
Just anything in general.
I remember when you said that. I remember it was Jim Rome. He was like, "I'm a happy taxpayer. Keep the war over there, not over here." And I was just like, "I'm a happy taxpayer. See those big battleships? Defend our country, right?
But do it over there."
Yeah, do it over there. So and people don't realize that. They just, very small-minded, right? And I'm glad that I've had this conversation, but I've also had a conversation with mentors when he says, don't limit yourself.
Exactly.
Don't be afraid. You know what? I can afford to pay this in taxes. Why? Because I can. Mm-hmm. And then, until you start making the next level, money. And I still find it very interesting that Gary Vee, who is someone I follow on social media, and he talks about this, in order to be in the 1% earners in America, you only have to make $425,000 a year to get you to that 1%.
I actually didn't know that.
And I was just like, really?
Wow.
Everyone always like, oh, I want to be this millionaire, right? I'm like, dude, he goes, you know how hard it is to be a fucking millionaire? It's really hard. Yeah. So it's a lot of work and a lot of sacrifice and stuff to get there. I go, if I have millionaires, that's great, but if you learn how to live off of $25,000 and you earn $100,000, I'm going to feel like a millionaire.
Yeah, exactly.
And that is 100% like attainable. And I just don't, it still blows my mind that people always aim for like this high number. I'm like, get to that level, right? You live off of 25 and you make $85,000 a year. You're gonna feel like you make $1 million.
Exactly. Yeah. Now that conversation would be kind of more of a, what's your mindset? What's your goals? What are you trying to do? Because you can have someone who makes $5 million a year, but if they don't know how to manage the money, they're just as bad as someone who doesn't work. Now, if you have someone who does make, to your point, $80,000 a year, but they've managed to just live off of 20, and the rest of it, they invest it. They're smart with it. They save it. Whatever the case may be, that remaining income that they have, it's going to be worth more than the $5 million that the other person has that they don't know what to do with it.
Yeah, that's what a great conversation. I am so mind blown. Like, I can't wait to go look for that form, and I'm just gonna look at it and just like stare at it and just like learn it, just because for my own knowledge.
Yeah, exactly.
It's because not because I'm trying to find a way to cheat the system. No. It's just like, oh, okay, so this is what this means. All right, this is what this means.
And that's one thing. Sorry, I didn't mean to cut you off, but that's one thing that I love to do with all of my clients. I love to explain to them what goes on in their with their tax return, because in the end, you guys are the ones signing it.
Yes. We're liable.
Exactly. You're the ones liable.
Yeah.
If the IRS is going to go after someone, it's going to be you guys.
Us, yes.
They're not going to go after me.
And
so just to kind of expand on that a little more, I go through every line with my clients. Hey, this is your income. These are the credits that you qualified for. This is your standard deduction, or this is your itemized deduction. And that's how we get to this point. And again, I just want to explain it because you're going to sign it. So I want you to know what's going on in your tax return. Okay. So again, I love doing that because again, not everyone knows about taxes, or not everyone wants to know about taxes, because I get it. It's boring, right? But if it's something that I enjoy, let me pass this information along to someone else. Let me, I don't want to say educate, but just let me show you what's going on your tax return, right? Because again, you're signing it, eventually you're liable.
Yeah,
so,
you're liable.
So there you go. And just to kind of segue a little bit, there's a big chunk of people that should seriously not be scared of taxes, and I'm sure this happens a lot in the Latino community, but a lot of people who don't have their papers or immigration status, right? If they're illegal, it doesn't matter. You can still file a tax return, and those are the people that should really not be scared, because the IRS doesn't care if you're a citizen, a resident, or an alien, and an illegal immigrant. They don't care. They just want to receive taxes. So for tax purposes, you can get an ITIN number. You can get a number that's used solely for tax purposes, and that's how you start getting your history with the IRS. Because hopefully sometime soon you can apply to get your citizenship or your residency,
yes.
And the first thing they ask for,
taxes.
So if you have your tax history, that's all you need.
Yeah, and I learned that working in my 9-to-5 property management, where they bring in their taxes, and the responsible people that do that, I mean, that's where you want. I also tell them, like, look, you're only claiming $15,000. There's four of you.
That's another thing, yeah.
When you retire, good luck.
Yeah.
But at least you're filing taxes, and it's very important. Don't, be scared, because Latinos are just like, oh no, they have this fear, right? Like, oh, I'm not going to pay any taxes. Like,
yeah.
We need to get over that, and we need to know, if you're making money, you're making money. Be responsible how you spend it. Make sure you have enough money to pay your taxes when it's time to do, time to do that. Mm-hmm. So I'm glad that you mentioned that, and I'm glad in you remind people that, like, if you want to become a citizen and you can show proof that you've been paying taxes for 10 years, the government's gonna be like, cool, you're responsible.
Exactly.
That's exactly what we're looking for. Responsible people. I love responsible people. What's it called? So, that's super important. Anything else that you want to share? Any other tip? Something like an unknown thing that people always, like, a common mistake people do and they can avoid?
I will say a very, very common mistake that a lot of salaried people do, and salaried people are the ones who, you have to fill out your W-4 at your 9-to-5. Yeah. Keep in mind, that's going to dictate your tax return. When you file your taxes, that's going to dictate whether you're going to get a refund or if you're going to pay. Because I've had a few clients, single taxpayers, right? Just, single person, no kids, nothing. They're making $40,000. They end up having to pay $2,000-$3,000. And they yell at me, why do I have to pay? I don't get it, blah, blah, blah. Like, well, look at your pay stub, or look at your W-4. You have yourself as married, and you have 5 dependents. So that dictates how much federal and state income taxes are taken out of your paycheck. That's a big, big common mistake that people make. Now, what you claim on your W-4 doesn't necessarily reflect what you have on your tax return. I'll give you an example. Myself. I'll use myself as an example. I'm married. I don't have any kids yet, but I'm married. Yeah. On my W-4, I have myself as single and 0 dependents. I want the maximum amount taken out of my paychecks, because at the end of the year, me personally, and I'm not saying that you need to do this too, but just a little tip. I want to forget about it at the end of the year. If I have to pay, if I have to get how much am I going to pay? 9.5 out of 10 times, I'm going to get a refund. Yeah. And I told my wife the same thing. Put yourself as single and 0 dependents. When you see your paychecks, I get it. It
hurts.
It sucks. It hurts because it's a lot of taxes taken out. But add that amount that you see in federal income tax. If you look at your pay stub, look at federal income tax withheld, state income tax withheld, add up those amounts each pay period. That's how much you've paid in taxes. So when you file your taxes, again, let's just make an easy scenario. You file your tax return, you have a tax bill for $1,000. That's how much you have to pay. Now, in your W-2, it's going to reflect that you paid $4,500.
Yes.
Here's your refund of $3,500. Why? Because you paid more. Why? Because on your W-4, I put single and zero dependents.
And they're taking out the max.
They're taking out the max. I get it. It hurts, but at the end of the year, cool. I just got $3,500.
Yes.
Now, there's an argument that people make that's saying, oh, but you're giving the government an interest-free loan, blah, blah, blah. Again, it's just, it's totally up to you. It's totally how you want to go about your finances. I get it. But this is just a really good tip that I give people saying, if you don't want to worry about having to pay taxes at the end of the year, make this change. Make this change. You forget about it. You don't even have to do zero dependents. You could do one or something like that. But don't exaggerate and put 5, 10 dependents, because then you're going to get zero taxes taken out, and then you're going to get a nasty surprise at the end of the year.
Yes.
So that's one big common mistake that I see. So, and I'm always wanting to explain this to people because, again, sometimes they just don't know, or people haven't explained it to them. So this is one thing that I actually pride myself in explaining to people, because same thing, I usually get the same reaction, like, oh my God, I had no idea, thank you. And just hearing thank you, that makes my day.
Right? Because then they understand it and then they're educated.
Yes.
Yeah, and most Americans in the coronavirus expose this. You're out of work for 1 month and all of a sudden you're running around like a chicken with head off, and you just don't know what to do with your finances, and then Papa Trump's got to give you a bonus for you to survive. That's hella embarrassing. But for people who do that, claim the 5 dependents. Now, if it's someone like myself, I'm super responsible, great with money, have no debt, and I'm using the extra money to invest it in different stuff to grow a business, and then I'm at the end, I know I'm gonna have to pay taxes, but it doesn't matter because I use that money now to build a business. I will have the money to pay the taxes. But not everyone's like me. Everyone will go buy a new car or rims and just buy dumb shit, and they have no money. Yeah. So, I mean,
and also on that, now granted, this is still kind of up in the air about the whole stimulus relief, right? Yeah. It could be taxed. It might not. So that's an extra amount that you have to pay taxes on. Everything comes back to taxes. It just does. It just does. So again, the more informed you are about taxes, the better choices you'll be making.
Yeah. And when I got the $1,200, I was like, yeah, I might get taxed for this later, so I'm just not going to be dumb.
Yeah, and that's also like a whole another conversation. But when you have these opportunities, I've always told people, and you can see this yourself on my Facebook page, Julio's Tax Services. I made a post saying, if you're fortunate enough to receive the $1,200, use it wisely. Pay your rent. The landlords still have their expenses too. Pay your mortgage. They're not going to be extending this to the end of the loan. They're still expecting the mortgage. Pay your bills. You still have to pay them.
Yeah.
So just because you're getting this extra amount, and again, I don't want to sway this conversation, but if you're getting this amount, be smart with it.
Yeah.
Be smart with it. Just make a better decision, make a better choice, live better.
Yeah, and also on top of that, and I'm going to elaborate, not only to be responsible, take care of your basic necessities, but if you're responsible and this is like just extra money, spend it with a small business, because that money, I think it was Mark Cuban, I heard he goes, if I was president, I would give everyone money, but I would force them to use it because it needs to go into the economy.
Right.
And that will keep the economy moving. And I was like, oh, that's really smart. He's like, yeah, it'll keep it moving. That way, it won't be so bad. Like, later. So you get the money and you put it back into the economy. Don't buy stuff that you don't need, but just put it into local small businesses that are around in your area to make sure that they stay afloat, and that way things will the money just moves.
Yeah, there's a big quote that I read. I honestly don't know who wrote it, so I'm not taking credit for it. But it says when you shop small, you're helping a little girl with her ballet classes. When you shop small, you're helping a family pay their mortgage. You're not helping a CEO buy their 4th beach house.
Yes.
So, granted, I love Starbucks. I do. I love Starbucks. Yeah. But if I see a local coffee shop, hey, let me just go get a coffee there. To your point, shop small, help the small businesses, especially right now with this pandemic, because a lot of these, a lot of the restaurants, unfortunately, just had to close. They just couldn't make it. They couldn't survive it, or they've changed their operations just to be able to survive.
Yeah, so shop small, support your local economy. It's super important, especially during the pandemic. Julio, thank you so much for all your knowledge.
This is awesome. This is awesome.
This is so awesome. I am so happy I learned. I'm so happy people who listen are going to, I think they're going to feel a lot more comfortable with taxes. And again, where can they find you?
So you can find me on Facebook, Julio's Tax Services. Okay. That's really the only thing I have right now. But there's more in the works. But for now, Facebook, Julio's Tax Services. Email, Julio's Tax Services @gmail.com. Reach out with any questions that you have. If you just need help with filling out a form, I'm more than happy to do that. Just reach out.
Don't be afraid of taxes, people.
Taxes are your friend.
Pay up!